Tesla Q3 earnings call. Elon Musk sets ambitious 2025 deadline for full autonomy in driverless vehicles. In a recent earnings call held on January 29, 2025, Tesla's CEO Elon Musk unveiled an ambitious timeline for achieving full autonomy in Tesla vehicles, targeting unsupervised self-driving models to be operational by June 2025. This announcement was made during Tesla's fourth quarter earnings call, where the company reported revenues of $25.71 billion, which fell short of analysts' expectations. Musk's plans for the rollout of a robotaxi service, particularly in Austin, Texas and other U.S. cities, signify a significant step towards realizing Tesla's long-held vision of autonomous driving. Key highlights from the earnings call. 1. Full autonomy by 2025. Musk reiterated his confidence in Tesla's full self-driving FSD technology, stating that the company is on track to launch thousands of driverless vehicles as part of a robotaxi service. Vehicle owners will have the option to contribute their cars to the fleet when not in use, akin to a ride-sharing model. Musk indicated that these vehicles would be operating autonomously in select U.S. cities by the end of 2025, emphasizing the urgency of safety in the deployment of this technology. 2. Financial performance. Tesla's financial results for Q4 revealed a revenue of $25.71 billion, a decline from previous estimates of $27.27 billion. The profit margin from vehicle sales decreased to 13.59%, down from 17.05% in the prior quarter, attributed to heightened competition and increasing interest rates affecting consumer demand. Analysts highlighted that Tesla's advanced FSD software has been a crucial factor in maintaining its profit margins amid these challenges. 3. Affordable vehicle models. Musk announced plans to introduce a more affordable vehicle model by mid-2025, utilizing existing production platforms rather than creating a new separate line. This decision is aimed at making Tesla vehicles more accessible to a broader market, although specific details regarding pricing and specifications were not provided. 4. Optimus humanoid robots. The call also included ambitious plans for the production of Tesla's Optimus humanoid robots, with Musk proposing the creation of thousands by 2025. He posited that these robots might eventually become a more significant revenue source than vehicle sales, underscoring the potential of robotics in Tesla's future business model. Musk described the production of robots as a rapid scaling opportunity, predicting that demand would quickly outpace supply. 5. Skepticism and challenges. Despite Musk's ambitious goals, there remains skepticism among analysts and investors. Tesla has a track record of missed deadlines and unfulfilled promises regarding autonomous vehicles. While Musk's vision is bold, the challenges in achieving full autonomy and maintaining competitive pricing in an increasingly crowded EV market are significant. Detailed discussion points. During the call, Musk addressed the current status of Tesla's FSD technology, claiming that the vehicles are already capable of operating autonomously within the confines of the Fremont factory. He emphasized the importance of ensuring a low probability of injury before allowing drivers to divert their attention from the road, such as checking emails or using their phones while driving. Musk's assertion that Tesla is leading the industry in real-world AI capabilities was also a focal point of the discussion. He stated, "There is no company in the world that is as good at real-world AI as Tesla." This claim is intended to position Tesla as a front-runner in AI development within the automotive sector, further justifying the company's ongoing investments in this area. In terms of market dynamics, the earnings call revealed that Tesla is facing increasing pressure from competitors, particularly from companies like BYD and established automakers like BMW and Volkswagen, which are introducing more affordable electric vehicle models. The decline in year-over-year deliveries for Tesla in 2024 has raised concerns about its ability to maintain market share amid these competitive pressures. Analysts' reactions. Reactions from analysts following the earnings call were mixed. Some analysts expressed cautious optimism, noting that Tesla's initiatives in reducing production costs have been encouraging. However, others highlighted the inherent risks in Musk's ambitious timelines, especially considering the company's historical challenges in meeting projected delivery dates and production goals. Thomas Martin, a senior portfolio manager at Globalt Investments, remarked on the positive steps Tesla has taken to reduce costs, which could mitigate some of the negative impacts of falling demand. However, he also noted that the potential for growth in vehicle sales might be hampered by the broader economic environment, including high interest rates and evolving regulatory landscapes. Future outlook. Looking ahead, Tesla's strategy for 2025 seems centered on a multifaceted approach that includes advancements in autonomous driving, the introduction of more affordable vehicles, and the ambitious rollout of humanoid robots. While Musk's statements have generated excitement and speculation, the ability of Tesla to deliver on these promises will be crucial for maintaining investor confidence and market leadership in the electric vehicle sector. In conclusion, Tesla's Q3 earnings call revealed a blend of optimism and caution as the company strives to achieve its lofty goals in the realms of autonomous driving and robotics. As the automotive landscape continues to evolve, all eyes will be on Tesla's ability to navigate these challenges and capitalize on its innovative technology to drive future growth. In the Tesla Q3 earnings call, several counterintuitive elements emerged, particularly concerning Elon Musk's ambitious plans and the company's financial status. 1. Ambitious autonomy timeline versus historical delays. Musk's assertion that Tesla will achieve unsupervised self-driving capabilities by June 2025 contradicts the company's history of missed deadlines. Despite Musk's confidence, analysts are skeptical due to Tesla's track record of delayed product launches and promises regarding full autonomy that have yet to materialize. 2. Robotaxi service versus current market reality. The announcement of a robotaxi service where vehicle owners can add their cars to a fleet when not in use seems optimistic, especially given the regulatory and technical hurdles in launching such services. Musk's timeline suggests rapid deployment in cities like Austin, Texas, where regulations may be more lenient but the practical implementation remains uncertain. 3. Profit margin decline amid cost reduction. Tesla reported a decrease in profit margins from vehicle sales while simultaneously stating that the average cost of materials and labor for building cars had hit a record low. This juxtaposition is counterintuitive because one would expect reduced costs to correlate with improved profit margins, yet the company faced pressures from increased competition and high interest rates that impacted demand. For affordable vehicle models with no new platform, Tesla's plan to produce a more affordable vehicle model using existing platforms rather than developing a new one raises questions about the feasibility and competitiveness of such models in a rapidly evolving market. This approach seems paradoxical, as the expectation for lower-cost alternatives typically involves a dedicated platform designed for mass production. 5. Humanoid robots as revenue drivers. Musk's claim that the production of Optimus humanoid robots could eventually surpass vehicle sales in importance is a bold assertion that challenges traditional automotive revenue structures. This perspective on robots becoming a primary revenue source seems counterintuitive, especially as the market for humanoid robots is still largely speculative compared to the established vehicle market. 6. AI development claims versus competition. Musk's assertion that Tesla is far ahead in real-world AI development to the extent that he would need a very big telescope to see competitors contrasts sharply with the growing investments and advancements from other tech companies in AI and autonomous driving technologies. This self-assuredness may not accurately reflect the competitive landscape, suggesting a disconnect between Musk's confidence and the realities of the tech industry. 7. Regulatory concerns amid expansion plans. The plans for robotaxi services and autonomous vehicles coincide with potential regulatory changes under the Trump administration that could hinder Tesla's operational flexibility. This scenario, where ambitious growth targets align with uncertain regulatory environments, presents a paradox, as the company may encounter increased scrutiny just as it aims for rapid expansion. In summary, while Tesla's earnings call showcased Musk's grand vision for the future, a variety of counterintuitive elements highlight the complexities and potential pitfalls of these ambitious plans. The juxtaposition of bold timelines, historical challenges, financial performance, and evolving market dynamics presents a multifaceted picture of Tesla's trajectory moving forward. In the recent Tesla Q3 earnings call, Elon Musk's commitment to achieving full autonomy for Tesla vehicles by June 2025 has garnered significant attention. Yet several important nuances within the discussions are often overlooked. Here are the key aspects that deserve closer examination. 1. Context of skepticism around autonomous claims. Musk's promises regarding full autonomy are not new. Historical context reveals a pattern of ambitious timelines and missed deadlines. Observers should note the significance of these repeated claims. They reflect not only Musk's visionary aspirations but also the pressures he faces from investors, the market, and competitive forces. The skepticism surrounding his timeline is not merely about doubt in technology but also about the credibility of the brand and its leadership. This skepticism is crucial as it can influence investor confidence and stock performance, impacting Tesla's ability to fund its ambitious projects. 2. Financial implications of autonomous technology. While Musk emphasizes the potential profitability of a robotaxi service, it is essential to consider the financial ramifications of a delayed rollout. The cost structure of developing and implementing full autonomy could strain Tesla's finances further, particularly given that Q4 revenue fell short of estimates. The potential for decreased profit margins due to rising competition and increased costs highlights the precarious balance Tesla must maintain between innovation and financial health. Investors often overlook how critical the timing of these technological advancements is to sustaining profit in an increasingly competitive EV market. 3. Production challenges for humanoid robots. Musk's focus on the Optimus humanoid robots as a potential revenue driver is another point of interest. The timeline Musk proposes for producing thousands of these robots by 2025 raises numerous logistical and technical challenges that could be underestimated. Manufacturing capabilities, supply chain issues, and regulatory hurdles could impede this ambitious goal. The significance here lies in the broader implications for Tesla's diversification strategy. If successful, these robots could redefine Tesla's business model, but if not, they could divert resources and attention from their core automotive business at a critical time. 4. Impact of market competition and economic factors. Tesla's decreasing profit margins and the first year-over-year drop in deliveries in 2024 cannot be dismissed. The impact of high interest rates and rising competition from established automakers and new entrants like BYD and Rivian is a significant factor that could affect Tesla's market share and pricing strategy. The significance of this competition is profound. It indicates a maturing market where Tesla may not maintain its first-mover advantage as aggressively as it has in the past. This competitive landscape challenges Musk's assertions of future growth and could lead to strategic pivots that investors should monitor closely. 5. Government relations and economic policy. Musk's new role in the Trump administration and its potential influence on Tesla's operations is another layer that deserves attention. Any changes to policies affecting electric vehicles, such as emissions regulations or tariffs, could have substantial implications for Tesla's cost structure and market strategy. The significance here is multifaceted. The policy shifts could not only affect operational costs but also alter consumer incentives and the overall landscape of the EV market. Observers should remain vigilant about how these political dynamics could shape Tesla's future. 6. Technological development and AI leadership claims. Musk's assertion that Tesla is unrivaled in real-world AI development is a bold claim that should be scrutinized. The implications of such claims are significant for both technology partnerships and talent acquisition. Overlooking the competitive landscape of AI development can lead to misjudgments about Tesla's actual standing in the field relative to other tech giants. Investors should consider how Tesla's AI capabilities influence its broader business strategy and whether Musk's confidence in this area is warranted, especially as other firms ramp up their own AI efforts. 7. Consumer response and market readiness. The introduction of a more affordable Tesla model is a strategic response to consumer demand for lower-cost EVs. However, the details remain vague and the market's readiness for such a model is uncertain. The significance of consumer sentiment, especially in light of economic pressures and competition, can greatly affect the success of this initiative. If Tesla misjudges the market's appetite or fails to deliver on price and features, it could jeopardize its growth trajectory. Conclusion. While the Tesla Q3 earnings call highlighted lofty ambitions regarding full autonomy and humanoid robots, the overlooked details are deeply significant in understanding the complexities of Tesla's future. The interplay of skepticism, financial implications, competitive pressures, government relations, technological leadership, and consumer readiness creates a multifaceted landscape that requires careful navigation. Investors and stakeholders must consider these nuances to gain a comprehensive view of Tesla's prospects and the potential risks that come with Musk's bold vision. The road to full autonomy and diversified revenue streams is fraught with challenges that could reshape the company's trajectory. 1. Ambitious timeline for full autonomy. Elon Musk's announcement of a target date for unsupervised self-driving models by June 2025 represents a significant milestone in Tesla's long-promised journey toward full autonomy. The plan to introduce a robotaxi service that allows vehicle owners to contribute their cars to a fleet highlights Musk's vision for the future of mobility. This ambition aligns with Tesla's ongoing efforts to position itself as a leader in autonomous vehicle technology. However, skepticism persists due to previous unmet promises, leading to questions about the feasibility of this timeline and the regulatory landscape in cities like Austin, Texas. 2. Financial performance and market challenges. Tesla's Q4 revenue of $25.71 billion fell short of analyst expectations, and the decline in profit margins from vehicle sales signals challenges amid rising competition and high interest rates. The mention of a year-over-year drop in deliveries for the first time adds to concerns about Tesla's market position. The company's reliance on advanced full self-driving FSD software for profit margins indicates the importance of this technology in maintaining financial health. Furthermore, the competitive landscape with rivals like BYD and traditional automakers launching new affordable models complicates Tesla's growth prospects. 3. Introduction of affordable vehicle models. Tesla's plan to launch a more affordable vehicle model in 2025, leveraging existing platforms rather than creating a new one, is a strategic shift aimed at expanding its market reach. While specifics are lacking, the focus on reducing production costs and making electric vehicles more accessible aligns with broader industry trends. This move could help Tesla capture a larger segment of the market, especially as competition intensifies. However, the absence of concrete details raises questions about how this model will differentiate itself in a crowded marketplace. 4. Development of humanoid robots. Musk's assertion that the production of Optimus humanoid robots could eventually surpass vehicle sales in importance marks a bold pivot for Tesla. This ambition suggests a significant diversification of Tesla's revenue streams, positioning the company at the forefront of robotics as well as automotive technology. Musk's confidence in the scalability of robot production and the potential for high demand reflects a vision that extends beyond electric vehicles. However, the practical implementation and market acceptance of humanoid robots remain uncertain, and analysts will be closely monitoring developments in this area. Overall, while Tesla's future ambitions are bold and potentially transformative, the company faces significant hurdles in execution, maintaining market relevance and meeting the expectations set by its CEO. 1. The race to the moon. 1960s. The Apollo program, initiated by NASA in the early 1960s, aimed to land humans on the moon and bring them safely back to Earth. The program was marked by ambitious deadlines and technological innovations similar to Musk's aspirations for Tesla's autonomous vehicles. President John F. Kennedy famously proclaimed the goal of landing a man on the moon by the end of the decade, setting a challenging timeline that required unprecedented advancements in aerospace technology. Despite numerous challenges including tragic failures and significant budget constraints, the Apollo 11 mission successfully landed Neil Armstrong and Buzz Aldrin on the lunar surface in July 1969, fulfilling Kennedy's vision. The program exemplified the potential of human ingenuity and the ability to achieve seemingly impossible goals through determination and innovation. 2. The development of the Internet 1980s to 1990s. The creation and expansion of the Internet is another historical case that mirrors Tesla's ambitious plans for full autonomy. Initially developed as a means of communication for government and academic institutions, the Internet underwent rapid changes and expansion during the 1980s and 1990s. Pioneers like Tim Berners-Lee and Marc Andreessen set ambitious goals to make the Internet accessible to the general public, leading to the development of the World Wide Web and browsers. Similar to Musk's claims about the potential of autonomous driving, early advocates for the Internet envisioned it as a transformative technology that would change how society communicates, conducts business, and accesses information. The eventual success of the Internet, despite initial skepticism and numerous technical hurdles, showcases how bold visions can reshape industries and everyday life. 3. The Manhattan Project 1940s. The Manhattan Project, which developed the first nuclear weapons during World War II, serves as a notable example of a high-stakes project with ambitious goals and tight deadlines. Initiated in response to the threat from Nazi Germany, the project brought together some of the greatest scientific minds of the time, including Robert Oppenheimer and Enrico Fermi. The urgency to develop the atomic bomb before the Axis powers did led to rapid advancements in physics and engineering. Despite initial setbacks and ethical dilemmas, the project achieved its goal with the successful detonation of the first atomic bomb in July 1945. The Manhattan Project's blend of scientific innovation, urgency, and the quest for groundbreaking achievements parallels Musk's ambitious timelines for Tesla's autonomous vehicles and humanoid robots, emphasizing the potential for transformative change when significant resources and talent are committed to a bold vision. Future outlook, predictions for Tesla and the autonomous vehicle landscape by 2025. In the wake of Tesla's recent Q3 earnings call, where CEO Elon Musk reiterated his ambitious goal of achieving full autonomy for Tesla vehicles by June 2025, the future of both Tesla and the broader autonomous vehicle AV market holds significant implications. Here are several predictions based on current trends, technological advancements, and Musk's outlined plans. 1. Realization of full autonomy by 2025. Musk's claim that Tesla will launch unsupervised self-driving models by mid-2025 is optimistic yet plausible given the rapid advancements in AI and sensor technology. If Tesla successfully rolls out its robotaxi service in Austin and other major U.S. cities, it could set a new standard in the industry. However, achieving regulatory approval and public acceptance will be critical hurdles. If Tesla can demonstrate a strong safety record through extensive testing, public sentiment may shift favorably towards autonomous vehicles. 2. Expansion of robotaxi services. By the end of 2025, we can expect Tesla to have a scalable robotaxi service operational in multiple urban areas. This model could significantly alter personal transportation dynamics, creating a network where vehicle owners can monetize their cars when not in use. The concept of personal vehicles contributing to a shared fleet has the potential to reduce urban congestion and lower the overall cost of transportation for consumers. 3. Increased competition in the autonomous vehicle market. As Tesla pushes forward with its autonomy goals, competition will intensify. Companies like Waymo, Cruise, and emerging startups will likely accelerate their own autonomous initiatives. By 2025, We could see several players offering varying levels of autonomy, leading to a more fragmented market where consumers have multiple options. This competition will drive innovation but may also lead to a price war affecting profit margins across the sector. 4. Financial performance and market dynamics. Tesla's financial health will be tested as it navigates increased competition and fluctuating demand. With a reported decline in vehicle sales and profit margins, Tesla will need to optimize production costs and enhance its full self-driving FSD software offerings to maintain profitability. By 2025, it is conceivable that Tesla's revenue from FSD and robotaxi services could offset any declines in traditional vehicle sales, provided the technology is robust and widely adopted. 5. Emergence of affordable electric vehicles. Tesla's plans to introduce a more affordable vehicle model could reshape the market landscape. By leveraging existing platforms to produce lower-cost vehicles, Tesla may attract a broader customer base, especially as more consumers seek cost-effective EV options. If successful, Tesla could solidify its position as a leader in the EV market while also encouraging adoption in segments previously dominated by internal combustion engine vehicles. 6. Advancements in AI and robotics. The development of Tesla's Optimus humanoid robots could become a significant revenue stream by 2025. Musk's assertion that these robots will surpass vehicle sales in importance reflects a strategic pivot towards automation in various sectors, including manufacturing, logistics, and potentially domestic assistance. If Tesla can deliver on its promise to produce thousands of Optimus robots, this could open new markets for the company and redefine its brand identity. 7. Regulatory challenges and public perception. As Tesla rolls out its autonomous services, regulatory scrutiny will increase. The company must address safety concerns and regulatory requirements to build public trust. By 2025, the outcome of these interactions with regulatory bodies will shape the viability of autonomous services in the US and globally. Consumer perception of safety in AV technology will also play a crucial role in adoption rates. A single high-profile incident could significantly impact public sentiment. 8. Sustainability and environmental impact. The growth of EVs and autonomous vehicles aligns with global sustainability goals. By 2025, increased adoption of Tesla's products could contribute to lower emissions in urban environments. However, the company will need to ensure that its production processes and energy consumption align with these sustainability goals. This will include a focus on renewable energy sources for charging infrastructure and sustainable manufacturing practices. Conclusion. The next few years are poised to be transformative for Tesla and the autonomous vehicle industry as a whole. While Musk's ambitious timelines may face skepticism, the rapid pace of technological advancement and shifting consumer preferences suggest that significant progress is possible. If Tesla can navigate the challenges of safety, regulation, competition, and public perception, it may well realize its vision of a future dominated by autonomous vehicles and innovative robotics by 2025.